The Japanese yen begins to tremble, quietly at first, then violently. One of the world's most stable currencies is slipping to levels not seen in decades. But behind this fall is not just economics, it's a storm of politics, power plays, and rising global tension. This is not a normal market dip. This is a warning signal coming directly from East Asia, and it is flashing bright red for the entire world. When we say the yen is collapsing, we do not mean it has become worthless overnight. Instead, it is rapidly losing value against major currencies, especially the US dollar. And when a currency loses value this fast, everything a country buys from abroad becomes more expensive: fuel, food, raw materials, technology. But the impact goes far beyond Japan's borders. A major economy in trouble forces other powers to react. And China is reacting, not with tanks, not with missiles, but with financial weapons, policy shifts, and quiet moves inside the global money system. Behind closed doors, Beijing is reducing its reliance on the US dollar, expanding the influence of the yuan, and slowly challenging the G7-dominated financial order. This means the yen's collapse is not a local issue. It is part of a bigger global struggle for control of the future of money. Here's what many people are missing. A weaker yen helps Japanese exporters. It makes Japanese cars, electronics, and machinery cheaper for the world. But inside Japan, households suffer. Prices rise, wages struggle to catch up, and living costs weigh heavier. Companies that rely on foreign supplies pay more. The pressure grows, economically, socially, politically, and when pressure builds inside a major economy, its decisions abroad change. This is where geopolitics begins to reshape the picture. China has spent years building its own trade networks, payment systems, and regional financial influence across Asia, Africa, and parts of Europe. As the yen weakens, China sees a perfect opening, not just to gain economic advantage, but to quietly shift how global money flows. No speeches, no public declarations, just slow, strategic changes happening out of sight. In this video, you'll learn why the Japanese yen is falling, what forces are pushing it down, how China is responding behind the scenes, why global powers are concerned, what this means for global trade, energy prices, investments, and currency values. And finally, 3 possible future scenarios if this currency conflict continues. If you're interested in global finance, hidden power struggles, and real-world economic shifts, then stay with us. Because this story is still unfolding, and the next moves could reshape the world's financial balance. Welcome to our channel where we break down global events simply and powerfully. If you want clarity on geopolitics, economics, and the forces shaping tomorrow, make sure to subscribe. Why the yen is crashing for years, Japan followed a unique path. While other central banks raised interest rates to cool inflation, Japan kept rates at zero, sometimes even below zero. The goal was simple: force money into the economy, push consumers to spend, encourage companies to invest instead of hoarding cash. But these policies came with a price. The yen became less attractive to global investors. When other countries offered higher returns, money flowed out of Japan. And when capital leaves a country, its currency weakens. These policies were created to fight a long war against deflation, a problem Japan has battled since the 1990s. But now a new threat has appeared: inflation driven by a weak currency, not strong economic growth. Japan now pays more for imported energy, food, and raw materials. Costs rise, wages stagnate, households suffer. A weak yen supports exporters, but it damages domestic stability. It raises inflation, increases financial vulnerability, and erodes confidence. And confidence is the lifeblood of global finance. Policymakers in Tokyo are now trapped between two choices: protect economic growth or protect the currency, and neither choice is painless. The yen's drop has shocked markets. It has now reached levels once considered impossible for a major economy. Worse, the volatility is rising. Sharp drops, sudden rebounds, then more declines. This instability signals a deeper problem. Investors no longer know where the bottom is. Japan has issued warnings that it is ready to intervene, selling US dollars to buy yen. But currency intervention is expensive, temporary, and only works if deeper economic issues are addressed. The Bank of Japan has begun shifting its tone. For years, it refused to even discuss raising interest rates. Now, officials are hinting that hikes may be necessary. But raising rates comes with its own risks, slowing growth, increasing debt costs, and hurting businesses. Japan is trapped in a narrow corridor. Move too slowly, the yen collapses. Move too fast, the economy slows sharply. How China is responding. China is watching Japan closely. A weaker yen gives Japanese exports an edge over Chinese products. To protect its industries, Beijing may allow the yuan to weaken, not dramatically, but gradually and quietly. Controlled weakening keeps Chinese exports competitive without triggering panic. This is not new. China and Japan have long monitored each other's currencies. When one adjusts, the other reacts. This could create a dangerous cycle of competitive devaluations, where countries push their currencies lower to stay competitive. But China is not just fighting for trade advantage, it is fighting for influence. Beijing is building an alternative financial architecture. Cross-border payment networks, digital currency systems, trade deals settled in yuan instead of dollars, regional financial alliances, strategic agreements with Asian, African, and Middle Eastern partners. Piece by piece, China is reducing its dependence on the US dollar, and a weakened yen makes it easier for China to expand this influence. Japan, once Asia's financial leader, is losing ground. Regional partners see China as more stable. That shifts trade, negotiations, and financial loyalty toward Beijing. This is how the G7 system is being slowly flipped, not with a revolution, but with a patient, silent transformation. Japan's weakest link, households inside Japan, ordinary families feel the pressure most. A weak yen makes imported fuel, food, and goods more expensive. Energy bills rise, grocery prices increase, everyday life becomes more costly, and wages have barely grown in decades. Savings lose value. Small businesses struggle. Stress builds slowly and silently. Governments can intervene, but foreign reserves are limited. If markets sense weakness, speculators push harder. Raising interest rates could strengthen the yen, but also drag down an already fragile economy. The impact ripples across Asia. Regional currencies are affected. Investors pull money from Asian markets. Smaller economies suffer greater volatility. This spreads faster than headlines can keep up. Three possible futures. 1. Japan acts. Decisively, Tokyo intervenes boldly. The central bank raises interest rates, investors return, the yen stabilizes, import costs ease. But the price is high. Slower growth, higher debt costs, economic restructuring. Stability returns, but with pain. 2. Japan delays. Too long, the yen keeps falling. Inflation rises, public frustration grows, investors lose confidence. Asia feels the shockwaves. Japan's strategic options shrink. Regional instability increases. 3. China pushes forward. Beijing accelerates its financial influence. More trade deals in yuan, more regional alliances. A softer yuan keeps exports strong. Countries drift toward China's financial system. The global economy begins splitting into competing blocks. These paths overlap. The outcome depends on decisions made behind closed doors by central bankers, politicians, and global powers. Conclusion. The collapsing yen is not just an economic story, it is a geopolitical message. Japan is fighting for stability and for its position in a shifting world order. China is testing how far it can push its financial reach. And the global system built over decades is slowly being reshaped. What happens next will define the future of global finance. Watch Japan's interest rate decisions. Watch China's yuan policy. Watch how the G7 responds to rising fragmentation. Because the next moves could determine how money, power, and influence flow in the world for years to come. If you want to stay ahead of these shifts, make sure to like this video, subscribe, and join us for more clear, deep, and powerful breakdowns of global events.